Yes, sir. It's your boy B Hayes. We back with another one, guys. Before we get into it, let's give this video a thumbs up. If you're new around here, go ahead and hit subscribe, turn on the post notifications so you'll be alerted every time I post a new video. So a new world order is coming for the stock market, guys, and it's about to get crazy. This is another part of the plan that they have in place to basically get a lot of people up out of these individual stocks, meaning retail investors. A lot of people is, individually stock picking, which they do not want you doing. They want you to invest in the index, invest in the S&P 500, invest in bonds. They do not want you out, picking great companies alone individually to where you could actually grow your wealth, as fast as they growing theirs, basically. So they don't want that happening. And so let's go ahead and take a look at this and exactly see how this new world order is going to also, drive the retail investors and herd into a whole nother direction and try to get them up out of these stocks that's really about to make the most money, guys. So let's go ahead and take a look at this. A new world order is coming for the stock market, explains BlackRock. So making money in the stock market will look a lot different over the next few years compared to the low interest rate era seen from the end of the great financial crisis, says BlackRock. So it's going to look totally different making money in the stock market over the next few years. This is what they say, guys. So basically what they're going to say to sum it all up, because we don't have to go through all this, guys. We like to break it down to where everyone can understand. So basically what they're trying to do is basically they saying tech stocks. That's why tech stocks are being, hammered down the way they have been. Because inflation is at a record high, mortgage rates is at highest rates that we've seen in decades, and the Feds was buying back in March 2020, buying over 120 billion bonds monthly. And in the last year, back in 2020, the Feds printed over 40% of the money that's right now in existence of today, guys. And all this is basically they trying to, basically balance everything that's going on in the economy. Now they shrinking balance sheets by $95 billion per month. Now they're trying to do all these things to basically tame this high interest rates and inflation going through the roof. Last January 2020, the U.S. Federal Reserve had around $4 trillion, which is around 40% of the U.S. dollars in existence, were printed in the last 12 months, guys. That's insane. So now what they're going to have to do is, instead of continue to, now they have to stop buying bonds and now start shredding, just getting rid of some of the money that's in existence to help tame what's going on, guys. So, and what they're really trying to do is, like I told you guys in the previous videos, how it's all coming together. They trying to, get retail investors up out of these stocks, these individual stocks, and make it seem as if very, very hard. And now they're trying to make it even more difficult to, calculate the stock market and make the market even more trickier to have people not be investing in individual stocks and have them buy the S&P 500, the Russell 2000, have them buy these index funds, these bonds, so they won't be, making a real bag and growing their wealth that way. And another way they trying to do that is basically saying with all this that's going on, judging by, the past, they say tech stocks is overvalued. The only reason they ran up is due to the pandemic. They went way overvalued, and now they coming back down to where they supposed to be at, and they gonna fall even harder due to the fact that they say theoretically through history they try to put this out there, which is true, but everything else they saying is false. Theoretically speaking, over the last hike, the hike rates, they seen value stocks outperform growth stocks over the last 2 to 3 years whenever this happened. So with that being said, that's going to shift the market and try to move them towards value stocks during interest rates being hiked, because they feel as if history is going to repeat itself, and they are already tumbling down and coming down. But really what they're trying to do is drive the masses, drive the retail investors up out of this situation, get them from the big money maker stocks, get them scared of the market, and have them invest in something that's more safer, or which they will call it, which it is safe. You should be investing in things like that, but still pick your individual stocks that you believe in, you understand the business, you looking at the charts over the past 20 years, and it's steady making higher lows over a long period of time, and you tell the fundamentals of the business, they still, you're looking at their balance sheet, they making money, they making profit, and everything is lining up. You still want to individually stock pick, because those bangers that you choose in your portfolio, if you diversify, will help your net worth grow way faster, 10x, 5x, 15x, then quicker than, you know, investing in turtle mode, which I call it. So you already know, guys, that's just my take on it. And know that they most definitely trying to do everything in their willpower to get retail investors up out of these companies, guys. And one of the ones that is definitely going to be hawking on is, and we'll be able to get it for a steal. If you invested in it, it's not to scare you, not trying to tell you to sell, buy, hold, because regardless, over time, it's still going to go higher and higher and higher. It's going to be one of the biggest, you know, runners in the stock market. And I believe that is Tesla. They still is early on in the game. If you've been following the channel, you got Tesla for a steal, because I told you guys at 500, 550, $500 range a while ago, I said load up, and Tesla done doubled up since. So you already know, guys, like I said, and we expecting, you know, I done shaved off in the thousands, and now I'm looking for Tesla to come down again, because that's one of the main targets that the retail investors heard. They, you know, majority, it's certain retail investors that have 80%, 70%, 90% of their portfolio straight Tesla, and it's on margin. So if they could bring that down far enough, they'll scare and get rid of a lot of retail investors and even try and margin call them. So I am expecting them to hawk and prey on Tesla as well, guys. At least one good drop again, like we seen on last year, guys, when we got in that $500 range. So you already know, guys, that's just my take on it. No, you know, they're gonna do everything they can to try to get you up out of your position. I also know that they also will be trying to come with new rules, I believe, far as how many retail investors barged in and rushed into the market, you know, causing so much traffic and volatility, which they want us here. They need somebody to prey on and take money from, but they didn't expect people to come in herds and come in millions like we did, because now we almost about to become as powerful as them, except for they able to still pull their manipulative tactics and still have one upper hand upon us until we can get some more transparency within the market, which we is getting a little bit, taking baby steps. Now short sellers have to disclose on a monthly basis their positions and let us know, you know, what exactly is going on a month-to-month basis instead of every 3 months to 6 months. So that is getting better, guys, with a little more transparency, but we still got a long way to go with that as well. So you already know that's all I got for this video, guys. Just want to give you guys a quick update, let you guys know exactly what they're trying to do with this new world order push, and just be on alert for it. So add your boy on Instagram at the B Hayes Show. I love y'all. We out, and God bless you. We gone.